Hello everyone, welcome to the market snapshots for today. So Nifty is up by almost 1.6% at 24,774. Nifty 500 is up by 1.46% at 23,803. Nasdaq up by 1.78% at 28,777 and S&P 500 is up by 1.5% at 7600. So pretty much a euphoric market, everything seems to be going green. But before I begin with today's session, I want to highlight few things. What have I been saying throughout the month of July? I think I have spoken a lot about the exposure not having more than 25-30%. I have spoken that while this uh, new new rise in the markets started in the Indian markets, it was basically the IPO index, Nifty small cap or micro cap, that is which was doing good. But at this point of time, it has completely transitioned into, larger caps, defensive sectors. And I think that is exactly how the markets are playing right now. And about the US markets, I think I have been very, uh, I think very constantly I have communicated if there is any index which I am looking at in the US market, that is S&P 500. Let's look at the actual numbers, how the markets are playing and where the markets are headed. So this is advances to decline, Nifty 500, 375 advances to 125 declines. So good going there. New highs 11, 489, new lows, not much there. The breadth has improved for sure. I mean, above 20 EMA 301 stocks, above 50 EMA 316 stocks, and above 200 EMA 296 stocks. So the breadth for sure. I mean, I remember, there was a phase wherein the breadth was neither improving nor deteriorating. It was just very flattish. But I think these are good early signs for the month of August that the breadth has started showing some strength. I really like these numbers. Nifty 50, let's look at this chart. I mean, like I said, I mean, I think throughout the month of July, I kept saying, a lot of liquidity is moving towards larger cap. Um, uh, a lot of us thought, this current rally might be the rally of small caps, micro caps, but at least for this point of time, that doesn't seems to be working. A lot of breakouts are not working in small caps and micro caps. Whereas if you look towards indices like Nifty 50 is looking very good from last 10 odd sessions. Nifty 200 is looking good. Nifty 500 is looking better, but then small caps and micro caps are really struggling. Nifty 500, it is almost at its all-time high again. I mean, matter of time, I guess. So, like I have been saying, a lot of liquidity is moving towards, defensive or large cap segment, and that is where the focus should be. Uh, the overall market sentiments are at this point of time very bullish. Nifty 50 above 50 EMA is bullish. Participation has been a strong. Breadth is strong. Nifty 500 similar story, bullish. Participation strong and breadth is strong. This is S&P 500, the index which I have spoken a lot about. The advances were 336 to declines of 164, so pretty strong numbers. 16 new highs, 484 new lows, and the breadth again, like a good looking breadth for sure. I won't say it's a very impressive breadth, but then not bad for sure in the context we are having. The markets are volatile every day. There is a news and markets, respond to those news. So looking at those kind of scenario, I think S&P's overall structure, function, numbers look good. Above 20 MA 294 stocks, above 50 MA 320 stocks, above 200 MA 337 stocks. The chart. So like, I mean, it was a very strong day. Just look, I mean, Nasdaq has is almost touching 50 MA, trying to reclaim it. But like I said, I have just been very ignorant of this particular index since the month of June. So it's been almost 2 months. I have not made any new positions in Nasdaq. S&P 500 again at its almost its all-time high, the strongest looking chart, the chart which I have spoken in lengths in all my previous videos for the month of June, that this is, there was a time when Nasdaq was looking good, or maybe Russell 2000 was looking good, but somehow it wasn't only the chart. I mean the and I mean there is a quite bit of data which I try to maintain on my end, and that entire story was telling me very clearly that if at all there is anything which is happening in the US at this point of time, that is broad liquidation from uh, these semiconductors towards larger techs or defensive sectors like health, technology or finances. And that is why S&P 500 has been my pick throughout this month of July, and that is what is playing out. Russell 2000, like I said, again, there's nothing wrong about this chart, but it is just that at this point of time, for me, if there is a favorite pick in the US market, undoubtedly it is the S&P 500. So overall, how does the US markets look like? Trend, participation, and breadth. Nasdaq is still bearish below 50 MA. Participation was strong yesterday, and the breadth is mixed. S&P 500 uh, bullish, participation is strong, and breadth is mixed. Russell 2000 bullish, and participation is strong, and the breadth is mixed. So overall, I would say for the US market, I would still not go with for an exposure which is more than 25-30%. My primary index would be S&P 500. With context of Indian markets, I think I can increase my exposure to maybe around 50% at this point of time. uh, I mean, a lot of people might feel this is conservative, but then I don't do stuff based on one day's chart, one day's number. I mean, the entire data has to be looked into a certain time frame. It cannot be one isolated day. So that is the reason I think the markets are going to stay there. We are not, it is not a one day event. So if at all markets keep moving, keep going ahead, we have ample of opportunities. If not, I think moving cautiously is the best bet. So that is what I would say for the US market. 25-30% exposure majorly into S&P 500. For the Indian market, it is uh, maybe 50% of exposure into Nifty 200 or Nifty 500. So why I'm still, although the numbers look so good even in the US market, why I'm not, increasing my exposure? So this particular slide is everything. See, US 10-year yields have already broken out on their monthly numbers. And, see, the thing about trends is it is not a one day event. uh, it is not that it has broken out, it has been into a a long trend. It will just fade away. It will take its time, and till the time yields keep rising, they will not let equities help for sure. So that is the my biggest point of worry. With a rising yield, I don't see a lot of things happening very positively in the US, in the equities market. And same is the case with the dollar. Although Fed is trying to to do stuff so that dollar falls, and it has fallen, but then is still hovering at around 200, is not something which is very helpful either for the US or the global markets as such. For sure it is down a bit, but then it should considerably go down. The yield should go down, and that is when I will increase my exposure in the US markets, or till the time I'll remain very conservative. The VIX at 1586 literally don't tell anything what is happening. I mean, that's very vague, I would say, but then that's how exactly it is. A lot of volatility in the market, and still VIX literally don't doesn't suggest much. Bitcoin has stopped moving. I think a lot of consolidation is happening around about those levels of 60,000 and 63,000. Intraday opportunities are there, provided you are someone who likes to be on the screen all the time, or else it will be difficult. Gold is also not moving much, hovering at around those levels of 39.80 to 14.40, 50, 48, 60. So a lot of accumulation is happening in the gold too. The dollar chart, like I said, I mean, a pressure was built, and for sure it has come down a bit, but then it need to that trend needs to change. I mean, still the EMA is rising, so until unless the trend changes, a lot of pressure on the equities market. Bitcoin, like I said, I think it has gone into a consolidation phase. A lot of maybe consolidation, a lot of accumulation is happening around about those levels of 60,000 and 63,000, 64,000. And same is the case with gold. A lot of accumulation happening at around those levels. So that's everything from my side. I mean, my only takeaway would be if you're looking for bets in the US market, the exposure should be around 25-30%. For the Indian market, it can be around 50 to 60%. Don't increase this exposure because the markets is not about only one chart. A lot of liquidity needs to move in. Why? I mean, till last week I used to say that in even in Indian market the exposure should not be more than 25-30%. So why am I saying that this week that it can go up to 50-60%? Is it just because this chart of Nifty or SN Nifty 500 is looking good? For sure, this is also one of the reasons. The other reasons, I mean, there are multiple reasons. So one thing which very good thing has happened in the Indian market last throughout the last week was the FIIs and DIs both have not sold anything. Although numbers are not very good in terms of inflow, it's not that huge chunk of money has flown into India. But the good point is, at least throughout the last week, there was no outflow. Nothing was sold. So if it is not getting sold, even that is a good sign. So that's the reason I would want to increase my exposure in the Indian markets, and I would still stick to the same exposure in the US markets. Bitcoin and gold, if you are looking to for long term, can be accumulated in form of ETFs, or in cash markets. Uh, and till the time the yields, the dollar keep rising, maybe increasing exposure in the US market might not be a very good bet. So yeah, that's everything from my side. I hope you all found this useful. Thank you so much and see you next time. Have a good one.